Good morning and a warm welcome. Thank you for joining us on a Saturday morning. Today we have Mr. Amit Grover from HDFC Asset Management. He is a lead trainer at HDFC Asset Management. Sir has conducted over 1,200 plus training sessions for banks, national distributors, MFDs, RIAs, and all the leading corporates across the country. His expertise include equity markets, fixed income, behavioral finance, history of markets, macroeconomics, and personal finance. It's truly a pleasure to have you, sir, with us here.
Thank you, Viren.
In this month's edition of our very own PentaTalk Knowledge Series, we will delve into the science of asset allocation. We have often heard that investing is an art, but today's topic explores how investors can tweak their portfolios a little or small in quantity, but can have the compounded effects for over time. This simple decision is perhaps the most important when it comes to investing your money. Academic research also demonstrates that approximately 80 to 90% of your long-term investment returns and your experience can be traced back and attributed to your investment decisions, which is the asset allocation. So without further ado, sir, I'll hand over the mic to you. Please, sir.
Thank you, Viren. Viren, do you want me to speak in English, Hindi, or a combination?
Combination is also okay.
Okay, Viren. Viren will have to help me share my screen.
Yes.
Sir, you can check now. You can share the screen now.
Yes, perfectly fine. Good morning, all participants. I would request all participants to put your questions on the chat box, and I will try to speak for like half an hour, and then the last 20 minutes we'll take question and answers from your side. So basically, this session is about how asset classes move, what is asset allocation, and how do we build a portfolio so that we can achieve all our financial goals with less amount of stress. So let's try to understand the science, the maths, and also the art of financial planning and asset allocation. So let's start with a very basic thought and a very interesting thought. Okay, finance, investment, and personal finance is not like science where you have exact answers. Physics, chemistry, you have exact answers. Like gravity is 9.81. Okay, science have exact answers, but in personal finance and investments, two amazing gentlemen, investors, both specialists in their field, but they can have different opinions. Just to give you an opinion, Warren Buffett, who is one of the legendary investors across the world, he says gold is trash. Okay, and on the other hand, there is a person called as Ray Dalio. Ray Dalio used to be the fund manager of the biggest hedge fund in the world, Bridgewaters, and he says that anyone who is not buying gold possibly has not understood history or not read history. Gold should be part of the asset allocation. So the beauty is that, you know what, two amazing investors can have two different views. So there is nothing called right and wrong when it comes to deciding what is right and what is wrong. That's the first thought. Second thing is asset allocation and financial planning is also not a mathematical thing completely. It's also a psychological thing. Let me give you an example of a very interesting gentleman. His name is Harry Markowitz. He got a Nobel Prize, okay, for designing a very complicated formula. It's called mean variance frontier. इस फॉर्मूला में ये सारे एसेट क्लासेस लेता है, उनकी वोलेटिलिटी लेता है और एक अच्छा सा एसेट एलोकेशन बनाता है, telling what is the right asset allocation, for which he gets a Nobel Prize. Interesting thing is, when in the press conference he was asked, how do you personally build your own portfolio? Do you use the same formula for building your own portfolio? To which he gives a very interesting answers. He says that formula was only for the Nobel Prize. My asset allocation is something very unique. He says 50% of my money is into equity and 50% is into fixed income. And when he was asked what is the logic and the maths behind 50-50, he gave a very interesting answer. He says when market goes up, I thank God that I've got equity in my portfolio. And when market falls, I thank God I have got fixed income in my portfolio. And he says, with this asset allocation, I can sleep very well. A very interesting answer, which has science also, which has also psychology. He's saying that I want to have a portfolio with which I can achieve my goals, but at the same time, I can sleep very well. And this is what typically financial planning and asset allocation looks like. Let us try to understand basically what are assets, what is asset allocation, and how do we build clients' portfolio. First of all, before I even move to asset allocation, the biggest mistake what generally people do is not defining their goals. Okay, because asset allocation is a function of your goals. It's function of your time horizon. It's function of how much you earn, how many earning members are there in the family. Okay, because all of this will decide technically how much is your risk appetite. I'll give you some examples for that. Let's say you've got children, okay, and you're thinking about their higher education. Higher education is something which is very important for most of us. Just to give you an example, the fees of IIM Ahmedabad 20 years back was around 2.5 lakh rupees. As we speak right now, it's 28 lakhs. The cost of medicine, as we speak right now, in a private college is around 80 lakh rupees. So basically, because of inflation, the cost of living, the cost of our goals are going up. That's first. We have to define our goals. कि आपको घर खरीदना है, गाड़ी खरीदनी है, retirement आपका goal है, children's education, their marriage, your vacation, your standard of living, your short-term goals. So you have to define your goals because your goals will decide technically how much risk you can take. If these goals are very long-term, okay, then obviously your risk appetite increases. If you're earning very well, your risk appetite increases. If husband and wife both are earning, your risk appetite increases. अगर आपकी job या आपका business stable है and you can forecast कि अगले 10, 15, 20 साल आप अच्छा कमा सकते हो, your risk appetite increases. If you get good inheritance, so obviously your risk appetite increases. So basically all these parameters decide if your health is fine, okay, and you are very sure about your future well-being in terms of earning and everything, your risk appetite increases. On the other hand, let's say there are a lot of liabilities. आपको अपने parents का ख्याल भी रखना है, बच्चे भी बहुत सारे हैं, then obviously your risk appetite comes down. If you're not sure about your income, then obviously your risk appetite comes down. If you're not getting good inheritance, or if husband and wife both are not earning, or if your job is not very stable, your risk appetite comes down. If your goals are very near, let's say if your children's education, higher education is after 5 years, 4 years, then obviously your risk appetite comes down. So basically, these parameters are decided, okay, are looked at to decide what is your ability. I'll again say your ability to take risk. But ability doesn't mean just because your ability is high, doesn't mean that technically you should take a lot of risk. And I'll give you an answer why. Let's say, so I stay in Mumbai, and I'm sure a lot of participants listening this session stay in Pune. If I have to go from Mumbai to Pune on an express highway, assuming the road is completely empty and I'm driving a BMW, so my ability is very high. मैं 120 पे गाड़ी चला सकता हूँ, 140 पे चला सकता हूँ, assuming there are no fines, okay? That's the assumption. So my ability is very high, but my willingness might not be there because I might be comfortable at the speed of maybe 80. So somebody might say, you know what, your ability is very high because you're driving a BMW, but my willingness might be very low. And how is willingness decided? It's basically on your behavior type. See, we all of us have to understand that basically we all have got different behavior. And this behavior is a function of couple of things. First is right from our birth, हमारा एक nature बन जाता है. We have not chosen, हमने कोई भी अपना behavior choose नहीं किया है. It was basically God's gift, whatever our behavior was. Then obviously your parenting, okay, how our childhood looked like, that also plays a big role in terms of our behavior. Then obviously life circumstances also play a big role in terms of our behavior type over a period of time. Some people by nature, okay, are worried, some are calm, some are insecure, some are secure, some are very imaginative, okay, and some are down to earth. Some like variety, some like routine. Some are soft-hearted, some are ruthless. Some are well-organized, some are disorganized. Some people have discipline and some people are careless. So basically, all of us have got different behavior type. And I'm not defining people in black and white. Okay, it's not like you are perpetually worried or you're perpetually calm. Obviously, we have got different shades of behavior, but also your willingness is a function of आपका behavior कैसा है. The beauty is you can read a lot of books on investments, but it's very difficult to change inherent behavior of a human being. That's why you have to look at your ability. You have to look at your behavior before deciding asset allocation. Now, let me explain you the science of asset allocation. I've seen the biggest mistake what generally people do is basically they want to chase asset classes which are doing very well. It's very human, okay? Just to give you an example, it's called the cheetah strategy. I'm sure आपने कभी भी cheetah की photo देखी है, इसी तरीके से देखिए cheetah को भागते हुए. Cheetah runs extremely fast. It's the fastest running animal in the entire world. It runs at the speed of 110 kilometers per hour. Absolutely amazing. But the interesting point is, which a lot of people don't understand or realize it, कि चीता इस स्पीड पे सिर्फ 30 seconds भाग सकता है, उसके बाद उसको 30 minutes की break चाहिए. So the beauty is all of us actually love to have cheetah strategies in our portfolios. When gold is doing well, everybody says, let's invest into gold. When real estate is doing well, everybody wants to buy property. When equity market is doing well, everybody wants to run towards equity. When interest rates are high, everybody runs towards fixed income. Even in equity, when mid caps are doing well, everybody runs towards mid cap and small cap. And this is not the right strategy, because what do you mean by asset allocation? There are different asset classes. Broadly, which are these asset classes we'll try to understand, but cheetah strategy is not the strategy. What is the strategy which is right for building your portfolio? I would request you to watch this video about this very interesting animal which is called Pronghorn. It's found in North America. ये बहुत interesting animal है. ये तेज तो भागता ही भागता है, इतना तेज नहीं, but अच्छा तेज भागता है, but ये बहुत लंबे समय के लिए भाग सकता है. So it basically has two things. It has speed and it also has stamina. So the idea of building a portfolio using asset allocation is to build a portfolio which has both speed and stamina. And let me try to explain to you how the maths works. First thing is, money is like water. पानी, पैसा पानी की तरह होता है, वो कहीं ना कहीं जाएगा globally. Okay, वो पैसा कहाँ जा सकता है? वो इक्विटी मार्केट में, इमर्जिंग मार्केट में जा सकता है, डेवलप मार्केट में जा सकता है, डेट में जा सकता है, जिसको हम बॉन्ड्स बोलते हैं और फिक्स्ड इनकम बोलते हैं. It can go into cash. When I say cash means saving account, or I can say liquid funds or ultra short term funds, category funds में. It can go into gold, a very interesting currency which has a history of thousands and I would say lakhs of years. Okay, it can go into commodities, it can go into real estate. So basically, money is like water. It will go into some asset class. कहीं ना कहीं तो जाएगा. What do smart people do, or what do wise people do generally? They actually build a portfolio across all these asset classes, because water and money will go at least in one asset class. कुछ ना कुछ हमेशा अच्छा करेगा. When you have a combination of all these asset classes, what happens? The risk in the entire portfolio comes down. Let me explain you step by step. Okay, what are these asset classes? How do they behave? And what do we mean by asset allocation? So basically, asset classes, all asset classes have got different drivers. इनको जो drive करता है वो different होता है. That's first. Second thing is, they are not correlated to each other. इसका मतलब क्या होता है? जब एक अच्छा कर रहा है, generally दूसरा अच्छा नहीं कर रहा होता. So when you combine them, what happens? The overall risk in the portfolio comes down. I'll explain this through stories and also with data for you to understand this in a far better fashion. So basically, in a very simple terms, what drives equity markets? This is a simple chart of earnings. What drives equity market is basically earnings, profit. As long as earnings of companies are increasing over a longer period of time, markets will do well. But obviously, earnings are not a straight line. Earnings में cyclicality होती है. So लंबे समय पे what drives equity markets is profits, earnings. But from a medium term and a short term perspective, what drives equity markets is sentiments and emotions. Just to give you an example, okay, there is a lot of optimism about Narendra Modi going to US. Optimism might come up. Suddenly, rainfall is not good. Optimism might come down. Okay, suddenly some state election, okay, somebody wins. Optimism comes up. Elections. Then now, obviously, 2024 is going to be a very interesting year, where basically two biggest democracies of the world will have election. The US will have election, India will have election. So obviously, from a short-term perspective, market plays a very, emotions play a very big role. Okay, but from a long-term perspective, it's earnings. But let me explain you basically what is the risk in equity market. There are two kinds of risk in equity market. सबसे पहला risk is which is called as, in our simple language, it's called as volatility, or in simple भाषा में ups and downs in equity market. Obviously, we all of us love ups. जैसे market last एक महीने से 2 महीने से ऊपर जा रही है, we all enjoy when market goes up. The problem is when market falls. This chart explains you by what percentage market falls or correct every year. ये chart ये नहीं दिखा रहा कि हर साल equity का return क्या है. ये chart ये बताता है from the highest point to the lowest point, what is the volatility or the drawdown in equity market. You will realize in the last 30 years, market every year it falls. Okay, some year it falls by 10%, 15%, 20%, 30%, and once in a while it also corrects by 50%. Just to give you an example, 1992 market corrected by 50%. ड्यूरिंग द .com बबल 2000 में, 2001 में, तब मार्केट गिरी 50%, 2008 में भी 50% गिरी. दिस इज द ड्रॉडाउन ऑफ इक्विटी मार्केट. कभी कभी मार्केट 30% भी गिर सकती है. ड्यूरिंग कोविड टाइम वी सॉ मार्केट्स करेक्टिंग बाय शार्पली बाय 36% in 21 days. Even like in the bull market 2003, 4, 5, 6 में बुल मार्केट चल रही थी. बुल मार्केट में भी मार्केट गिर सकती है. 2004 में we saw market correcting. 2006 में we saw market correcting by 30%. This is the drawdowns of equity market. आप बोलोगे I cannot withstand, I can't see my portfolio falling by 50%. It will give me sleepless nights. And this is what we recommend client. Don't put all your money 100% in equity because this is too much of volatility. Okay. I'm not saying some clients can't do it. Very few can do it because their wealth is different. But for majority of us, it's very difficult to manage this volatility. And that's why you have to add other asset classes like fixed income or gold and real estate in the portfolio because it reduces the volatility in the entire portfolio. Just mathematically, even if I add 50% of my portfolio into fixed income, the volatility will come down by around 60-65%. Okay, so what I've done, मैंने इसकी volatility reduce कर दी. So when you add fixed income and gold and other asset classes in your portfolio, you have reduced the volatility in your portfolio. That's first. Second thing is you also have to understand that equity market goes through cycles. कभी-कभी equity बहुत अच्छा करती है, कभी-कभी equity market बहुत boring period से जाती है. Just to give you an example, 2003 to 2008 was an amazing bull market for equity. It was a beautiful period for equity market. So during these times, you will say all the money should be into equity because equity was doing very well. 2008 to 2014, ये 6 साल Indian equity market return नहीं बनाए. Indian equity market didn't deliver good returns. So during these times, you will feel extremely bored about equity market. You will start feeling, why did I invest into this asset class? It's been 6 years, it has given 0 returns. And then again from 2014 to 2020, it gave a very moderate return. And then suddenly we saw a crash and then we saw a rise in equity market. So the journey of equity market has good times, interesting times, boring times. Okay, this is the nature of equity market. That's why we say add different asset classes which will do well when equity market is not doing well. And let me explain the science behind it. So just to explain you within equity also, मैंने क्या किया है, इसको categorize कर दिया है large cap में, mid cap में और small cap में. If you see the returns year on year of large cap, mid cap and small cap, there is also a very big difference. And that's why a lot of your distributors will also recommend you why you have to distribute your money among large cap, mid cap and small cap. Because large cap or mid cap or small cap में जो difference है returns का, okay, what I've done is I've shown the difference between the highest return of a category versus lowest. And you will see the difference. Kabhi-kabhi a difference between large cap, mid cap and small cap, like 2021 or 2018 or 2017 can be as high as 35%. That's the reason we always recommend you to diversify your money across categories also. Yes, your core portfolio should be on large caps, but mid cap and small cap also gives you diversification. These are sub asset classes between equity. Now, let me tell you periods जब generally equity अच्छा नहीं करता है. This is basically the interest rate cycle of our country. Now, this chart will explain you कि basically अगर आपको मैं history में लेके जाता हूँ, इतिहास में लेके जाता हूँ, and it's very important to understand history because history generally, I won't say repeat, it rhymes. आपको एक idea दे देता है कि basically portfolio किस तरीके से बनाना चाहिए. अगर आपको वक्त याद होगा 2000, 2001 और 2002, these 3 years were not good for equity market. Why? Because .com bubble हुआ था, okay, IT bubble हुआ था, and 2001 में then we saw some challenges in our country. We saw Ketan Parekh scam. We saw basically period of parliament attack which took place, and then we also saw the September 11 attack which took place, and then 2002 was also not a good period of Godhra riots. Economy was not doing well in general in India, but we saw interest rates coming down. So during this time, equity was not doing well, but fixed income बहुत अच्छा कर रहा था because जब interest rate गिरते हैं, तो bond prices were going up. So fixed income did very well. Similarly, अगर आप 2004 से पीरियड देखोगे 2003, 4, 5, 6, 7, ये 5 साल इंटरेस्ट रेट्स के लिए अच्छा नहीं था. इंटरेस्ट रेट इनफैक्ट ज्यादा नहीं बढ़ रहे थे. ओके, बॉन्ड्स अच्छा नहीं कर रहे थे. बट एट दिस टाइम इक्विटी वाज डूइंग वेरी वेल. गोल्ड वाज गिविंग यू वेरी मॉडरेट रिटर्न. 2008 में when equity market corrected, interest rates also came up down. Bonds did very well because interest rate गिर गए. So what you look at the very chart, you realize that equity and bonds have got negative correlation. कि जब जनरली इक्विटी अच्छा नहीं करती, बॉन्ड्स अच्छा करते हैं, और जब बॉन्ड्स अच्छा नहीं कर रहे होते, इक्विटी अच्छा करते हैं. That's why we say mix a combination of equity and bonds. Now let's talk about gold from a very interesting perspective. We think gold is an Indian asset class. In fact, there is nothing Indian about gold. Gold is not even mined in India. Okay, the mining of gold happens across the world, and the value of gold is done in dollar. What we receive basically, so when somebody says, you know what, I'm holding gold, you're actually holding an international asset class. Just to give you an example, gold कब अच्छा करता है? Whenever there is uncertainty in the market, जब भी inflation बहुत high होता है, oil prices बहुत high होते हैं, war problem होती है, या country में challenges होते हैं, like what's happening in Turkey or what's happening in Pakistan. Generally during those time, inflation बहुत high होता है, uncertainty बहुत होती है, FIs पैसा निकाल रहे होते हैं, nobody is investing into the country, your currency is depreciating, gold does very well. Just to give you mathematically the idea and correlation of gold. So I told you from 2004 to 2008, gold was not giving the best of returns, but equity did very well. But let's look at the period from 2008 to 2014. In this 6 years, जब equity market अच्छा नहीं कर रही थी, when equity market for almost 5.5, 6 years gave you very low returns, gold gave you amazing returns. Okay, gold ने इस period में approximately 21% CAGR return दिया, जब equity almost flat थी. इस समय fixed income also gave very good returns, because if you try to recollect, during 2010, 11, 12, 13, interest rates were around 8, 9, 10, even 11% in some cases. So fixed income did very well. So what we're trying to explain, that when equity was not doing well, fixed income and gold did very well. Similarly, from 2014 to 2019-20, when equity was doing well, gold ne usse mein अच्छा नहीं किया. And this is what we're trying to explain. This is what we mean by asset allocation. Just to explain you mathematically from a year on year basis के हिसाब से, this is the data of the last basically 23 years. I have just highlighted those years. So obviously equity market cannot give you positive returns every year. It generally gives you positive returns, but there are years when equity market gives you negative returns. I've just highlighted those years with a negative yellow color, and I've just put the chart on the right hand side. जब equity ने अच्छा नहीं किया है या negative returns दी हैं, look at the returns of fixed income or gold. You will realize that जब भी equity अच्छा नहीं करता है, generally, you will realize that let's say 2001, 2002, 2003, 2009, 12, 16, 20, whenever equity market has not given good returns or negative returns, look at the returns of fixed income. They are good double digit. And look at the returns of gold. They're a good double digit. And this is what we mean by asset allocation. We are not saying that one asset class is good or second is good. Yes, equity will give you the best returns from a long-term perspective, but with higher volatility, with zyada volatility. Second, most likely fixed income will give you the least returns from a long-term perspective, but with the least volatility. And gold comes somewhere in between. It will give you the moderate volatility with moderate returns. And then obviously real estate can be compared with gold or gold plus returns. Okay, but the biggest disadvantage of real estate sometimes becomes, I'm not saying real estate is good or bad, but the problem of real estate is predominantly liquidity risk. First of all, you cannot divide your real estate. You cannot sell it very easily. It is a good stable asset class, but you cannot get liquidity because of that. And there's also a problem predominantly because of maintenance, operating expense जिसको बोलते हैं. And lastly, it has also got idiosyncratic risk. इसका मतलब क्या होता है कि generally people say, यार मैंने वो property में invest किया, बहुत return बना. But those are basically of one property. The idea you cannot get diversification in property. Okay, which is a very important thing, because we have also seen instances where people have bought properties, okay, or real estate, and it's got stuck because of the wrong location, some litigation, some legal problem, under construction property, or maybe something coming up nearby. So basically, those are the challenges. So obviously, every asset class has their own advantage and disadvantage. Okay, idea is basically to diversify your money. From India's context, आपको diversify किस में करना चाहिए? Put into equity mutual funds, diversify across large cap, mid cap, and small cap, more towards large cap. If in case you want to further diversify, I would also recommend you to invest into international funds also. I understand उसमें taxation इतनी favorable नहीं है, but it gives you the benefit of you are reducing your risk of the portfolio. Just to give you an example, in HDFC, we have got a fund called as HDFC Developed World Index. Okay, just to give you an example, I'm not recommending. Obviously, I would request your mutual fund distributor to recommend you. Just to give an example, okay, this is just for an example. It helps you invest in all the developed markets across the world. It has US, Europe, and stuff. It just helps you in diversification. You can buy into gold. You can buy gold mutual funds. You can buy gold ETF. You can buy physical gold. You can also buy gold jewelry. Gold jewelry, I would say the least preference, but it's good from a social status. But honestly, there are a lot of problems with gold jewelry, making charges, impurity, getting lost. Gold coins can be a good option, but I think the better option is gold mutual funds. And even better than that, you can also look at, okay, sovereign gold bond funds. But the problem is there is liquidity issues over there, and they have a lock-in generally. So gold ETF, gold mutual fund, sovereign gold bond fund, you can invest into various ideas over there. Real estate, I would just say your first house, okay, where do you stay is not an investment. It's just a place to stay. But if you are super wealthy, then maybe you can invest some portion into real estate. But for most of us, if you are like typical middle class or higher middle class, I would recommend keep your portfolio into 3 asset classes, predominantly equity, financial asset, which is equity mutual fund, fixed income, and little bit into gold. If you're super wealthy, then maybe you can also diversify into real estate. But your first house is not an investment. It's a place where you stay. So let's to give you an example. Typically, when we say, what gives returns in gold, this is basically the first driver of returns, which is called as currency depreciation. Many times, gold internationally is not doing well, but since currency is depreciating, you get returns. That's why I told you gold is basically an international asset class. Just to give you an example, okay, I've taken 4 decades, 40 साल लिए हैं गोल्ड के. कभी गोल्ड प्राइस इंटरनेशनली बढ़ता है, कभी करेंसी डेप्रिशिएट करती है, दोनों में से कोई ना कुछ होता ही रहता है. That's why gold gives you moderate return with moderate volatility. But the beauty from an Indian perspective is that whenever, generally, I would not say always, because in investment there is nothing called as always. Generally, when equity market is not doing well, generally gold does well. Generally, when equity is not doing well, fixed income does well. Generally, not always. Generally, we have seen this trend. Okay, there are certain assets which it's very difficult to say it's an asset, and there are a lot of things about it. So these are basically personal views, okay? And every people can have different views. Some people like this asset, some people dislike it, some call it gambling, some call it the future. Okay, so basically this is where personal finance is more personal. The beauty of this asset class is that basically, and why I'll give you my reasons why I don't invest into this asset class, because I generally love those asset classes which are regulated, okay, are well regulated, okay, like mutual funds have got SEBI, okay, real estate to an extent has got RERA. Idea is you need a regulator. Banking has got RBI, so there is a regulator. Government is basically taking care of it. In this asset class, unfortunately, there's no regulator. It is anti-government. It's basically saying that, you know what, we are against the government policies. It's absolutely volatile, extremely volatile. That's my third reason. And my fourth is basically we cannot see any correlation with any asset class. My objective of asset allocation was to invest into asset classes which are not correlated to each other. We cannot find any correlation. And last but not the least, it has just got a history of last 10, 12 years. Okay, it has just started in the last 12 years, basically because of the quantitative easing which took place across the world. It doesn't have history also to prove anything. So personally, I would not invest into this asset class, but I'm not saying that you should not do it. It's your personal choice. But if you're investing, it has to be extremely small quantity, okay, because it is not a time-tested asset class. And that's why I say personal finance is more personal, okay, and you have to build your portfolio based on what you believe inherently. International funds, I invest into it. Some people say, you know what, I'm happy with India. I'm happy with equity, fixed income, little bit of gold and real estate. That's a personal choice. I would love to have some portfolio of mine into international funds, which is a very small portion. It helps me manage my risk. And that's a very personal thing. Lastly, I will just sum up before we take questions from all of you. At the end of the day, we're investing into asset classes with different objectives. There are some asset classes which can beat inflation over a longer period of time, which we call as wealth creators. Okay, direct stocks, not a very big fan. I think you should invest in direct stocks only when you have the time, energy, knowledge, and liking, which I've seen majority of the investors don't have the time, they don't have the energy, they don't have the knowledge at all. They can't read balance sheets, they don't know what is valuations. And lastly, they don't even have the liking. What they like is basically the entertainment part, which is not the best thing of investing. Mutual funds and PMSs can be a good way of investing. Personally, I'm more of a fan of mutual funds, but yes, some sophisticated clients also want PMS, and that's also a right way of doing it. Private equity, only if you are a wealthy investor. AIFs, private equity, investing into unlisted companies. If you're a wealthy investor, international equity, and if in case you find some themes which are very attractive. Let's say जैसे हमारा एक डिफेंस फंड आया था, तो आपको लगता है कि डिफेंस में एक अच्छी थीम बन सकती है, You can enter into it and exit at the right time, but this is only for specialized investors. These are high risk and high returns kind of ideas. These can beat inflation. Then you have got fixed income, which is basically the objective of fixed income is to give you returns in line with inflation. They give you stability in the portfolio, bonds, credit funds, even liquid funds, ultra short. When I say cash, means basically your liquid funds, ultra short term money markets. REITs can also be looked as a good option. Okay, investing over there. Then for uncertainty, you can look at gold. That's, I think, is a good asset class for uncertainty. Art is a very personal choice. I'm not in a very big favor. A cryptocurrency, I'm not in a favor. Maybe you can allocate some money, but I'm not in the favor of that. And then basically some ideas to reduce volatility in your portfolio. This is only for specialized clients. There are AIFs which are long short, okay, but they are specialized products. Choice है, मेरे हिसाब से नहीं करना चाहिए, unless and until you have a good understanding and you have a super wealthy portfolio. And then I think even this category called as balanced advantage fund or hybrid funds or multi-asset can also be used because they have an inherent asset allocation. You can also look at these portfolios. So that's all from my side on asset allocation, on financial planning, on building your portfolio. And again, repeat, your asset allocation depends upon you, your goals, your risk appetite, your family, your values. It's very important to do asset allocation because every asset classes goes through cycles. It's very difficult to predict which asset class will do well from a short-term perspective. जैसे 2023 में सिर्फ 6 महीने बचे हैं, क्या इक्विटी अच्छा करेगा अगले 6 महीने में या फिक्स्ड इनकम करेगा या गोल्ड करेगा? Only time will tell. So our job is not prediction, our job is preparation. This is what asset allocation tells you. Don't predict, prepare. You have to be in all asset classes so that you are able to achieve your goal with less stress. That means lower volatility over a period of time. With this, we'll end the session. And if in case our participants have any questions, we are happy to answer. Thank you.
Thank you, sir. Thank you for your very interesting presentation. As they say, don't put all your eggs in one basket. Asset allocation is all about spreading your eggs across multiple baskets and safeguarding your financial future. I would request all the attendees to put up their questions in the chat box, or they can even raise their hands in the dashboard and we'll unmute them. Meanwhile, I would also like to summarize our presentation, sir, what we have covered today, if you allow.
Yes, please, please.
Yeah. So we covered how risk appetite is a function of one's behavior type, and how individuals differ. Then we dwelled into the Cheetah strategy versus Pronghorn strategy and how one can use it. You explained the money and water analogy very good in a very perfect manner, sir. The risks of equity markets and how one can overcome it through diversification, correlation of equity and debt, trends in goals, and all the avenues or all the investment opportunities available for the asset allocation. I will take up the questions. We have some in the chat box. So the question is from Mr. Rohit Ranade. Would you say that whatever you have said about gold might also apply to silver most of the times?
No. And I'll tell you why. See, in fact, gold is very unique in terms of how it's constructed. Okay, the reason why gold generally, silver has a combination of two things. If you look at all the governments across the world, whether it's US or anybody in Europe or India, in our balance sheet, the government holds gold, okay, as foreign reserves. US holds gold as foreign reserves. It was always considered a proxy currency for all the governments. The reason why gold has its significance because of three things. It's in limited supply. Second, it is an inert material. अगर आप gold को जमीन में रख दोगे और 1000 साल के बाद भी आओगे, the properties of gold will not change. So basically, it has got infinite life. It's malleable and ductile, and it's got a history of people believing and having faith in this thing. Silver is also, there is a correlation between both of them, but silver is also predominantly looked from a industrial purpose. Whenever you see industrial use of silver increasing, we see a sharp rise. So it has got characteristics of a currency, which is less, but it's also got more characteristics of a commodity because it is used for industrial purpose. Yes, I think personally investing into silver, the better option is, I don't think honestly buying silver is a very good option because the quantity for silver what you require is a lot. Second is it also gets it's difficult to store silver. I think investing into gold, silver mutual funds or a silver ETF can be a good option. But I would say let your core portfolio be gold, and maybe you can add some amount of silver into your portfolio. But let your core portfolio from a commodity perspective be gold, and an overlay of silver can be a good option. At HDFC, we have got both. We have got gold funds, also we have got silver fund. We have gold ETF and gold silver ETF. So I'm not saying that one is better, but I would say let your core be gold, and you can have some overlay of silver.
The next question is from Ms. Prachi. She asks, how does inflation affect the asset allocation?
How does inflation affect asset allocation? Perfectly fine. A very, very logical question. See, honestly, I would not love to put money in equity. Very simple idea, because why should I put money into an asset class which is going up and down, okay, where there is volatility? Why would I love to do it? Why would I induce pain in my life? The reason I induce this pain in my life is predominantly because I have to beat inflation. I just gave you a very simple example, okay? If you look at Amul butter, okay, or if you look at the cost of education, or if you look at any goods and services over 20, 30 years, inflation was there, is there, and always will be there, whether we like it or we dislike it. It's an invisible enemy which is always there. Just to give you simple maths, I did my engineering in 35,000 rupees, my entire engineering. My son's school fees for 1 year is 35,000. And this is what inflation is all about. And this is how life will move. Inflation will always be there. Fixed income has a limitation that it cannot beat inflation. And that's the reason why we invest our money in asset classes which can beat inflation, which we call as investment, whether it's real estate or gold or equity. The thing is, when we invest into these asset classes, that high return come at a price. And what is the price? The price is ups and downs, which is called as volatility. What do we mean by asset allocation? We understand it's very difficult for anyone to deal with so much volatility. So we tell people to invest into different asset classes so that when you mix it up, okay, and they are not connected to each other, your risk in the entire portfolio comes down. And this is what you have to do. So obviously age, I think I also saw a question about age. Yes, age also plays a very big role. Obviously, when you are young and your time horizon is very high, you can take more equity. But obviously, when you come closer to your goals, or let's say if you're in retirement age, okay, unless and until you are Warren Buffett, okay, who's 90 years, he has 100% portfolio into equity. Because even if his portfolio falls 90%, he will have no problem, because with the 10% he can live his life. Okay, the idea is with age, obviously your risk appetite will also come down, your circumstances also change. So obviously your risk with your asset allocation would change at that time. At 60, 65, you would not like to buy a lot of real estate because you need money, you need hard cash in your portfolio. Okay, what is the objective at 70 having 5 properties where you are asset rich but you are not cash rich? Okay, because you want to live your life also, right? So you would like to have asset allocation based on your risk appetite, your age, your circumstances, and your behavior. And our behavior also changes over a period of time. At young, maybe we can take more risk. At 60, 65, 70, your willingness to take risk might come down. So those things will obviously change. And that's why you require a good mutual fund distributor who can understand you, your family, your goals, your circumstances, your situations, forecast, and build a portfolio which can meet your circumstances.
So the next question is very generic, sir. So how often should I review my portfolio and rebalance the funds?
See, there is no maths to it in terms of how frequently you should do it. It depends from person to person. When I was a mutual fund distributor, or when I said I was a banker, I used to use 2 techniques of doing it. For certain clients who are anxious by nature, I used to meet them very frequently, because what happens, it's not only about maths, because they need more hand holding. For example, by nature, if in case you get slightly anxious, you should tell your mutual fund distributor to meet yourself more frequently. It can be once in a quarter, okay, or maybe once in 2 months. But if in case, I think there are 2 times when you should review your portfolio. First, if there is some big changes which are happening in your family, let's say your salary has got increased, or there's new member entered the family, you got inheritance, okay, or let's say there is some changes in your savings and investment. There is something happening, okay, that's when you have to rebalance. Second is if in case you see a big shift in changes in the portfolio, कभी-कभी equity बहुत fast rally कर जाती है, maybe at that time you would like to rebalance your portfolio, or maybe there's a sharp correction in equity market, you would like to rebalance your portfolio. My idea is reviewing your portfolio can be done periodically, but I would also request you one thing. Just reviewing your portfolio doesn't mean predominantly कि आप review कर रहे हो तो आपको अपने portfolio में कुछ changes करना ही करना है. Don't do changes just for the sake of it. Because लोग क्या सोचते हैं, review कर रहा हूँ ना तो यहाँ से यहाँ करता हूँ, यहाँ से यहाँ करता हूँ. Okay, see, we love changes. Even at house, if you change, okay, the order of how things are kept, you feel good about it. It's new. But don't do it for your portfolio, because keep your portfolio as simple as possible. Because if you have a simple portfolio, if you have a logical portfolio, you'll be able to achieve your goals. Don't try to find excitement over there. Don't get too emotional about the portfolio. कि यार ये अच्छा कर रहा है. Don't try to build a portfolio where you have too much regret. Okay, there's always something you will miss out. कभी equity अच्छा करेगा, आप बोलोगे equity में कर देता, कभी gold कर देगा. You have to understand this is how cycles work. So you have to keep it simple and you have to review it. But review का मतलब ये नहीं है changes करना. Okay, and it depends from person to person. Some people love 6 months, some people love 1 year. Some people would do when there are big changes. So it depends from person to person.
Thank you, sir. So the next question is it advisable to invest into asset allocation funds, which invest into domestic equity, international equity, or gold and debt? Or the alternative is to invest separately and rebalance at investor side?
See, both are a good option. Ideally, it depends upon client's portfolio. For example, when I meet certain clients, okay, and they are very retail investors, very retail, and they are just very busy in their life, okay, and they have got children, उनको कुछ भी idea नहीं है, and they have got basic savings. I just recommend them multi-asset funds, because एक portfolio में सब कुछ उनका मिल जाता है, और उनको बोलता हूँ कि just invest regularly in this and build your portfolio. For these kind of clients, I do. But as you become wealthier, as you have got many wealth, you would like to have customization in your portfolio. Okay, for obviously, so if you are a HNI, if you are a super HNI or slightly above middle class, then you would like to have customized portfolio, depending upon your goals and your circumstances. So I'm not saying this is good or that is good. It depends upon your wealth. But for a retail, obviously, I always tell them, when you're very retail, please go with multi-asset funds. One product, one solution, and it will help you solve the problem.
Thank you, sir. Next question is from Mr. Raul. So he asked, how does one needs to do asset allocation in equities as well, such as small cap, mid cap, or large cap? What should be the ideal mix?
There's nothing called ideal. The idea is very simple. Your core portfolio should be large cap. Large caps are stable companies. They have been in existence for a long period of time. They can withstand any market cycle. जैसे HDFC बैंक है, ICICI है, TCS है. अगर इकोनॉमिक सिनेरियो खराब भी होता है ना, तो ये मैनेज कर लेती है. इनके पास प्रोडक्ट्स बहुत सारे होते हैं, इनकी मैनेजमेंट स्ट्रांग होती है, इनके पास कैश फ्लोज होते हैं, ये मार्केट से पैसे भी इजीली उठा लेते हैं. They get good employees also from the market. So basically, and they deal in many products, many businesses. So they can manage a lot of economic scenario. They are stable portfolios. Okay. So, but on the other hand, mid cap and small cap, they have a potential to do exceedingly well. Just to give you an example, like in mid cap, we have got I'm not recommending. I again say just what we're discussing is only for academic research. Like let's say we have a stock called Indian Hotels. Okay, it has got Taj group of hotels. So ideally, okay, this stock, obviously, India as it progresses, you might see a lot of people having good lifestyle and would like to live in such kind of properties. Okay, the idea is, and that's the beauty of these stocks. The potential to grow is a lot. Okay, a potential to grow is a lot. So, but the disadvantage is that there's when the economic scenario is bad, like what happened during COVID. Okay, a lot of people were not able to go. Or if the challenges there in the economic scenario, people will not spend so much money on tourism. So what happens is that when cycles are bad, these mid cap stocks also correct a lot. And the same is true with small caps also. Small caps are much more riskier. So what I'll suggest is basically you need to have a combination of all three in the portfolio. Core should be large cap, but the satellite portfolio should have mid cap and small cap. But what percentage obviously depends upon you and your client, and your MFD, your distributor, will be in the best position to decide it for you.
Thank you, sir. Next question is from Anand Desai. He asked, with aging, how should asset allocation change? You mentioned some thoughts, but is there a general template for the retail investors' perspective?
There is no template. I'll give you an example for this, and I'll give you my personal example. I'm around 40. My equity allocation is 60% equity, 30% fixed income, and 10% gold. Okay, that's my asset allocation. But I'm not recommending any of it to you because honestly, you don't know me. You don't know my goals. You don't know my circumstances. Nothing you don't know. I'm just telling you my asset allocation. But I was just checking my mother's portfolio. Okay, she has got 80% equity and 20% fixed income. And you'll say, how is that possible? The idea is, okay, unfortunately, I don't have my dad, but my dad used to have a combination of equity and fixed income. Equity value has grown up so much that value has become so large that technically today, as I speak, okay, the equity allocation is so high. The interesting point is that 20% fixed income is sufficient enough to take care of our entire life. Okay, and maybe she's thinking of the remaining 80% as inheritance, because generally we give inheritance only in the form of gold or real estate. But the best inheritance what you can give to your children, okay, in the future is actually equity. Just two nominees. It's me and my brother. Two nominees. Just it's the easiest way of passing to the next generation. So basically, her risk appetite is high because she's thinking next generation. You might say no, but age is 65, 67. But the moment she's thinking about next generation, her risk appetite increases. So the idea is, but that doesn't mean that this holds true for everyone. For example, you are in your 60s and you want to spend a lot of money for your lifestyle, and there is health issues and you want to take care of that. Okay, and your children are settled, but you don't want to be dependent on that. You would love to have decent amount of fixed income in your portfolio. Decent amount of fixed income in your portfolio. But obviously, in that case, your risk appetite comes down. In that case, your risk appetite comes down. So basically, obviously, age plays a very big role because your goals are near, and your behavior also changes with age. Okay, at certain age, you can take those volatilities. But let's say when you're retired and there is no source of income, whenever there is volatility, you will get impacted because of that.
Thank you, sir. I was about to ask your personal mix of asset class, but thanks for sharing it. I really thank you for taking out your time for us. We truly appreciate your presence and sharing such valuable content, sir. I would like to express my gratitude to all the investors who patiently listen to the webinar. As always, we hope to engage with our audience next month. Lastly, I would like to include the standard disclosure that mutual funds are subject to market risks. Please read all the scheme-related documents carefully before investing. Thank you so much for participating. Happy investing.
Happy investing. Thank you, Viren. And thanks.
Thank you,
have
sir.
a nice weekend. Take care. Bye.
Bye, sir.